All right, testing. Testing. There we go. Alrighty. Just gonna share this link around and then we will get started. What's good? What's good? All right, it's 3:05 now. We'll probably start like right around 3:10. So for the VOD watchers, just probably skip ahead 5 minutes. And finally, after months and months and months of boredom, we finally have something worth talking about. Oh wait, shoot, are we dumping? Looks like we're dumping hard. Woo! Well, folks, make sure I'm logged in, ready to ape. It's not quite cheap enough for me, though. Give me a darn real flush. Oh, that's alright. We'll get there. This still looks alright. What's some good ones to look at? Maybe Dopex. GMX looks pretty darn good. What's some other Jones, some other Arbitrum bags? There's a big one I'm missing too. Whereas Jones is just breaking out, dude. This looks really good. GMX, of course, always looks good. This is going to be an insane breakout when this finally gets out of this range. Oh my gosh. Well, now I want to know when I drew this. I mean, this is a perfect drawing. What else? There's one more I'm forgetting. We got Dopex, GMX, Jones. Could look at Hamachi. I'm not sure if this one is a scam or not, though. $4 million market cap. Me, it's not bad though. Oh, Plutus. That's a good one. I still feel like there's a big one I'm missing. I mean, we could throw up RDPX up there, but that's kind of same as Dopex. Yeah, I don't know. Maybe that's it. We'll think about it. Let me know if you guys have any more. Magic. Absolutely, dude. Oh my gosh, it's above $1? Holy shit. Well, this was a nice idea if they didn't run the lows before. And this idea is from like October, before FTX even shut down. Hey, look at that though. The idea was, if FTX didn't wreck us, the idea was there. Rip to the highs, retest. This is crazy though, dude. That daily candle looks pretty shite though. Alright, it's 310. Shout out Jackson Rains, my guy. Sorry. I had to freak out about half a second after I said that because I didn't even read your name to see if it was a bait. Is it good? Yeah, why not? I'll take a tea.
I'll get you a straw.
Alright, thanks. A little sweet tea delivery. What's up, Micho? Hold on, read this. Is this a bait? You know, like Mike Hunt. I already said it, so it doesn't really matter, but.
Is it Gillen?
Huh? No, Jackson. Right? It doesn't sound like a bait.
No.
Shout out Jackson Rains. I hope you're not memeing me. It's gonna be like Latin for go fuck yourself. That tea is pretty good. Thanks. Alright, well, we'll look at some shitcoins later on. I want to go ahead and do a nice simple. This is going to be the first live stream that I think stays on this channel for a while. So I want to make it kind of, yeah, I mean, not basic, but kind of basic, you know? I want to go through this really methodically. And it's a good time to, since we could be at a key cycle low, similar to early 2015 and early 2019. So let's let's go ahead and get into it. I hope you guys are all having a wonderful day, of course. Here's to a great trading week. All right, so the monthly is starting to shape up pretty darn nicely. We can go ahead and outline 14K. Who knows if that'll ever actually be a relevant level again, but really the only two levels we've had to work on for a while is 14K and 20K. You know, give or take a few $100. But now we're back above that. Things are starting to look pretty good again. We've got a rising slow stochastic cycle. And just to clarify, a lot of people use these stochastics and whatnot as like, oh, it's overbought or it's oversold. So, you know, when it goes up a lot, it's overbought, you sell. When it goes down a lot, it's oversold a lot, you buy. I don't quite like that as much. I prefer it more from a timing standpoint, right? It definitely, there is more edge to be long after the cross here and more edge to be taking profits after the cross here versus just, oh, we're getting overbought, time to sell, because as we can see just from this one example, you know, you can get overbought and stay overbought. Like you start to get overbought right around here, which is at this point here, $10,000 before Bitcoin rips up to $70,000. And then likewise, in the last cycle, really start to get overbought right around here, which is about $1,000 before the rip to $20,000. And then sometimes, you know, your peak is going to line up with the peak, right? But we're not necessarily using it just to try and snipe the top, snipe the bottoms, or anything like that. We're really more using it for a timing indicator. And now our main timing indicator has swapped back bullish, where the red is rising. And our leading momentum indicator is also, well, I should say, attempting to reverse, because if we were to somehow nuke back in the next 9 days, this might not be an uptick in momentum. But for now, we've got a bullish engulfing, we've got an uptick in momentum, and we've got a rising stochastic cycle. The only thing we're really looking for outside of that is for price to close back above this 8 EMA, which you can't really see right now. It's this teal line, but it's kind of right flat with the 60, which is kind of crazy actually. If we can close back above that too, I'm pretty much willing to be full bull and go get really aggressive on a lot of these setups. But for now, this could just be an underside test of the 8, meaning maybe we retest back near like 20 to 21 or something, like the top of this bearish candle, something like that. And if we start to form a lower time frame downtrend again, like right now, the 4 hour looks something like this, right? Well, if we start to form a new downtrend, we might have to be a little bit cautious if we don't hold near 21 of retesting all the way back at 18.5. Okay, which would, in my opinion, be the most ideal level, because, you know, right around like 20K, everyone wanted 18.5. That was the level every chart had. Well, let's not say every, like 75% of the charts were, we want 18.5K, and the other 25% were like, well, you're not going to get 18.5, so we want 19.5. And I'm pretty sure we didn't get either of those levels, and we ripped right from 20 to almost 24. So now a lot of people are kind of giving up hope that we go back to 18.5. I'm not really personally sure. You know, I could totally see that happening. I mean, I could even see new lows happening again this year, depending on how things turn. But for now, we're just going to take it one day at a time, right? And we've got 3 of our 4 indicators telling us everything's a go. We've got 9 days to confirm most of this, but the stochastic's good. Momentum looks good. I don't see this bullish engulfing going away. I mean, we'd have to close below 18.5 in the next 9 days. There's definitely been crazier things, but, you know, I think we're good on this bullish engulfing confirmed. So things look pretty good. We would like to see a close above 22.5 this month. But, you know, that being said, it's not the end all be all just getting above the 8 EMA, right? You got to get above it, and you got to stay above it and maintain an uptrend, right? And there's plenty of examples. Let's pull up something from the old market. Let's pull up Chainlink. Right. You can close above the 8 EMA and not be back in a good uptrend. You know, here we close above it, close below it, close above it, close below it. Here, close below it, close above it, close below it, close above it. It's not the end all be all, but it definitely gives us a lot more confidence in our intraday and our swing trades if we're trending above the 8 EMA. Here's another good example from the last bear market. Close above it. Oh, let's go fully long. And then you just nuked all the way back to the lows, right? It's not always going to be, you know, you close above the 8 EMA and then you just rocket to new all-time highs. I mean, it happens, but, you know, not always. So even if we do close this month above whatever it was, 22.5, it doesn't mean it's an insta long. You know, you gotta play the trend on the lower time frames too. So now one thing I will say with this model, again, this 8 EMA, even if we get above it now, it's going to do something like this, right? You know, it takes time for this 8 EMA to come back up, and we want it to be coming up while we're trending above it, right? Like, just looking at that teal EMA, you can see when the times are to be long, right? You want to be long from here to about here, or really even about here. When it goes flat, it's time to get a little bit cautious, and when it's going down, you definitely don't want to be involved on the long side. Well, right now, it's not like that, right? It's not going up. It's not even really going sideways yet. It's still kind of going down. So what often happens, and this is not just on the monthly, guys, it's on the weekly, on the daily, on every time frame, you'll get a close above it, and then a close below it, and the second close back above it is usually the one to hit hard. We could probably find an example on Bitcoin on the lower. I'll talk about it again when we start to zoom in a little bit, but it happens all the time. And then sometimes, you know, you're going to close back above it, and you're not going to get back below it until the bull run's over, the big uptrend's over. So, you know, once we're back above it, I'm looking for 4-hour dips. I'm looking for daily dips. I'm even looking for 1-hour dips. Keeping in mind that sometimes, like this example right here. You're going to get above it, and it's going to fail, right? But it doesn't mean that you have to be, I'm buying here and I'm selling here, right? You could buy here, and I'll show you real quick exactly how I played that, and I did not play it well. Definitely a lot of mistakes were made on this big COVID nonsense, but again, this was a close above the monthly 8, so now we're looking in here, really, to be buying dips to be getting long. Okay, we had a nice, healthy uptrend, right? Something like this, right? So we can be buying dips, and then here, we start to form a downtrend, right? Where our recent higher lows are knocked out, and we start to make lower highs and lower lows. This is a new downtrend. So while we're trending above the 8, we're really waiting to be in a state while we're trending above the 8, we're also trending on the daily and on the 4-hour, right? If we're above the 8 on the monthly and the weekly, and we're doing this on the daily and the 4-hour, everything's good. We could be hitting all these dips, taking profits on new highs, all that good stuff. So how I played this, I was looking to be long. I'm sure I was probably long a bit in here, but mainly once we broke these bands, had to be really cautious because this whole uptrend was now broken. We're trending above the monthly 8, so during this month, maybe you could say we're just testing below it or whatever it may be. So I got long on this dip, and then I started to short on this rip. So if we do this, I cut the short and I ride the long. Or what really happened is, if we were to zoom in on this, you're going to see the same thing we're talking about in daily. You're going to see a trend like this, and I'm getting long in here, and I'm getting short up in here. Once it started to roll over, which you can't really see it on the daily, but it was right about in here. You cut the long and you ride the short, and just like if we broke the highs, you'd cut the short, ride the long, and so that's exactly what happened. I cut the long, even though we had just closed above the monthly 8. Sometimes you gotta work with what you got. Closing above the monthly 8 does not mean we're going back to all-time highs. And unfortunately, I closed my shorts in like the 6K region before we went to 3K. But, mistakes are made, right? But the point there I want to say, or I'm trying to make, is just that closing above 1 EMA is not the end-all, be-all. We need a good, strong trend above it, okay? But other than that little point, things are starting to look really great on the monthly. Biggest thing for me is getting back above that 8 and having it start to curl up, and then having a daily 4-hour trend above it that looks healthy. All right? And also, ideally, we'd like to get past this bundle of EMAs. Just like I pointed out earlier on that Chainlink chart, it's the same with BTC. And we've actually never even had the 8 EMA below the 60 in Bitcoin's history, But these are the times to be heavy long. These are the times to be a little bit more cautious. And then in here to here, heavy long. Now it's still time to be cautious, just like in here, just like in here, and just like it'll be in here. So, my thing I've always said since, the start of 2022, I'm not sending money back from the bank. I'm not reinvesting from outside capital into crypto until we've got a good trend above the monthly 8. And I've stuck to that, and I'm going to keep sticking to that, right? Even if that means I'm not sending fresh capital into crypto until we're at $30,000 Bitcoin or whatever, right? But anyways, that's about all we can get out of the monthly. Next real level you'd be looking at on the upside is around 25K, and then this cluster of EMAs in here, as well as this cluster of wicks from over here. That's going to be a pretty pivotal level around 28 to 30. So I could totally see this echo bubble going up to 28.30. I would much rather we get a little bit of a retest, a healthy dip on lower time frames before that happens. But it is what it is. You get what you got. I love your dad. Did I ask? Who the hell is that? Forced oof. I don't know what you talking about, brother. All right, let's go ahead and everyone following along. I'm assuming. If we ain't got questions, I'm gonna assume we're following along. So going into the weekly here, we have our first tiny little bullish uptick in momentum on the weekly since 2021, since right here, which was the big breakdown. Now that's pretty crazy to me. You know, it's not the end all be all again. It's just like the monthly 8. It's not like, oh, uptick bullish momentum, time to ape everything. Because, you know, you can have that happened right here too, in that exact spot we were just talking about. Oh, we closed above the monthly 8. Oh, we got the uptick momentum, and then 3 weeks later we nuked back to 6K or 3K, whatever. That being said, for those of us that were around then, and I'm pretty sure everyone remembers March 2020, you know, waiting an hour outside the grocery store to get in with a damn mask. That was, what's the word I'm looking for? I mean, I didn't want to say a black swan event, obviously, but I would say more, uncommon. We'll just stick with that, right? That's not going to be happening. That's not a regular occurrence, right? These massive black swan events. Just like this FTX drama thing. I mean, that is not a common natural thing. But anyways, looking at the weekly here, it's very similar to the monthly in that we still have this little cluster of EMAs above us, as well as this horizontal resistance. So not really the place I want to start to be getting long. You know, when we zoom in here again, you're going to see little trends in the daily and the 4 hour. I'm not talking about that, right? I think it's okay to be long in those dips. But I'm not sure if I've been, you know, flat this whole time. I want to come in here and start to be a buyer, right? You're basically banking on a big reversal through here that does not retrace at any point, right? Like, I don't know. I don't think that's the move. I'd much rather try and catch this 8 EMA that's coming up on the weekly. See, this is what we want on the monthly. Right now, the monthly 8 EMA looks a little bit like this, right? We're starting to flatten out a little bit, but we have not gotten any real bullish momentum yet on it. We want it to be upward sloping. So the weekly is that way. So if we get a dip back towards 19K, for me, that's going to be a buy. And let's also keep in mind, guys, these EMAs are not super point specific. You know, if this 60 EMA is at 26,370 and we go to 26,380, it doesn't mean you're all in, full bull, nothing like that, right? We want to consider these as areas. So, you know, this is a take profit area up here, right? And then here's the 8 EMA. This is a buy the dip area. Simple as that, right? And this is the range you're trading in between that. And then once we get a real trend going and we get out of this shit show now, then things get a little bit simpler, but it's going to be the same strat, right? You want to be buying these dips to our EMA support, okay? And then when we crack through that, you want to step out the way. All right, so the weekly looks solid. I mean, we've had a really nice oscillation here. Not really too much edge with these cycles lately. It tends to be that by the time the cycle crosses on the weekly, the move is kind of up. Like right here, we get the cross, we're already at the lows. You know, right here, we get the cross, we're already at the range low. Like, so not much edge there, but I will say we've got a rising cycle. We've got an uptrend in that the last lower high that nuked us down to the lows has now been taken out. We've still got 3 hours, but if we close above that, we now have the first new higher high on the weekly. And for those of you that don't know, are not familiar with my trading model, there's like 3 things we want to look for in a bottoming process, right? First thing is you want to stop making lower lows. Now, you know, when you determine that that has happened is kind of up to you. You know, do we come in on this date right here and say, all right, we stopped making lower lows? Well, you could, but there's not much confidence in that, right? Because you're only 2 weeks after the recent low. Versus you come in here, you've already made a higher high and spent some time making this higher low. I think you can be pretty confident that you're trying to stop making lower lows. All right, so that's 1, stop making lower lows. 2, make a higher low, which we did in here. It's a little bit tough to see. You know, I'd be more confident in a higher low like this in continuation, but still a higher low nonetheless. And then 3 is just make a higher high. All right, stop making lower lows, make a higher low, make a higher high. That is the simplest metric to determine what trend you're in, right? You know, it was the same way back in the bull market, right? Okay, you're making higher highs. Again, do we determine that we've stopped making higher highs here? No, not really. The same way you wouldn't determine you stop making higher highs right here, right? The trend is still going. There's no confidence in that. But once you come back down to your recent higher lows, and then you start to make lower lows, and then you make lower highs, well, now we've basically got the whole process. You've stopped making higher highs, you've made a lower low, and you've made a lower high. This was the significant trend change. This was the time to step out the way. Okay? And so it'll be the same thing on the flip side, right? But I want to do this again. I know we did it on the monthly already, but let's just take away the candles and see if we can tell the best times to be super aggressive on the long side. I mean, again, obviously, if this was a, super live setting, then it'd be a little bit easier. Someone could talk, but this is essentially where we're at, right? All the bands are trending down except the 8 EMA, and the 8 EMA is trending below the 60. What we want is this 8 EMA, the teal line, to be trending above the white, the 60, right? This is if we're on the weekly, this is representing our daily trend. Okay, and we're in the northern hemisphere on the daily when the trend is like this, and we're in the southern hemisphere when it's like this. I'll explain that a little bit more in detail when we zoom in. Hey, what's up, buddy? Finally made it to YouTube. Yeah, Twitch is old, dude. Twitch is for gamers only, We're educational crypto stream. We got to get on that YouTube. But yeah, guys, simplest method for determining the overall trend is just look at the weekly EMAs, right? And you can see when that teal 8 is above the 60, that's when you want to be the most aggressive, and least aggressive when it's below it, right? Right here to here, good. Right here to here, good. And now, obviously, got to point this out. When those trends start, you will never be buying the bottom, right? The fact that the trend has already had time to develop means you're not going to buy the bottom. And when the trend breaks down, you're not selling the top. And that's fine. I talk about it a lot on streams, so I'm not going to go super heavy on it, but my big money was never made in here, in here, right here, right? I wasn't only selling here. The big money is made in the meat, right? In the middle of it all, okay? And, sometimes, like in 2018, I mean, I did not even really get aggressively involved until in here and still made a ton of money, Didn't have to buy here, didn't have to buy here, didn't have to buy here. I didn't even get in back then until here. Made some good money, and then most of the trades were up here within a few weeks. Still made some great money. You don't have to be involved at the very bottom or the very top to make some good money, okay? And especially when the trend is against you, right, where you're looking to get long, but the overall trend is still down, the goal is just to survive, right? If we assume crypto is going to be surviving long term, I mean, if you're assuming crypto is going to die, I don't know what you're doing. I just would not be involved, right? If you think it's going to die, step aside, let the markets do its thing, I personally am extremely confident in Web3 and crypto and all that having, some standing for a while. Will there be something technologically that surpasses Bitcoin in the future? Probably. I mean, at some point, will it be 2024? Will it be 2025? Will it be 2030? Will it ever happen? I don't know. But I expect Bitcoin to be around and in a long-term uptrend for a very long time. And by long-term uptrend, I just simply mean every cycle top and low is going higher and lower. Even if we came all the way back to 5K Bitcoin, this would still be a long-term uptrend, right? I'm expecting this to continue. I mean, until I don't know when. I'm not even willing to put a date on it. I don't know how long, but I'm expecting it at least into 2030. So my goal long term after these grueling bear markets is to be a buyer. All right? If you're not expecting that, if you're expecting it to fail, just step out the way, But for me, I never go flat on crypto because just as much as it would make sense to do something like this, and give us all the perfect entry before we rip, how often does crypto give you the perfect entry? Let me zoom into the daily and give you a perfect example. and I'm going to use other people as an example, but this goes for me too. You know, when we get into the highs here, I don't really want to be buying because every time the last year we've gone to the previous highs, we just nuked. So at that point, everyone's thinking, all right, you know, I'll buy the retest down here, and then it goes up. Okay, well, I'll buy the retest a little bit higher, and then it goes up again the next day. Well, then I'll buy 19K. It goes up the next day. Okay, I guess I'll buy 19.5. It goes up the next day. I'll just, you know, and we're just waiting for that perfect dip, and it just keeps on going. So the same thing could happen here on the weekly. You know, as likely as we could be back at 20K or 18K in a few weeks, we could also be at 30K. So for me, I never go completely flat on crypto. I always have exposure in some way, shape, or form, right? Whether that's I have some crypto locked up in DeFi, earning some rewards, or I've got some vested seed sale bags, or I've got some spot bags, or a leverage trade, whatever it is. I've always got something open. So I'm never going to wake up, you know, I'm not going to go to bed tonight, wake up tomorrow to this, and feel like an absolute idiot. You know, oh, I had all this time to get some, I didn't. You don't want to let the emotions get to you, but when you see something like this and you're flat, or when you just bought the dip super heavily and you see something like this, the emotions are going to get to you. So for me, as much as you're managing your risk, you got to manage your emotions, right? Because when you get super emotional, you're going to make worse decisions. Just speaking from habit, right? So, you know, that's why I always keep a little bit on the table. Even, you know, if I've got 10 grand to my crypto exposure, 1,000 of that's going to be on the long side. Even if I'm feeling super bearish, some of that is going to be on the long side in some shape or form. So I'm never going to freak over this. And as long as you have cash, a good cash stack, you're never going to freak over this. And the only other thing that there's going to be is sideways, right? And you know, if you're going sideways, well, I've got some longs, so if we rip, I'm fine. I've got some cash. If we dip, I'll buy the dip. I'm fine. That's been my main thing the past year, 2 years, is just making sure that no matter what happens, I'm not going to wake up, you know, no, oh, what's happening, you know? You're not going to wake up like that. You wake up and it pumped, all right, well, you know, I've got some stuff I can sell. You wake up and it dumps, all right, well, you know, I've got some cash here and some things I'm looking to buy. And if it just goes sideways, well, you know, find some other stuff to do outside of crypto while you wait. All right. Anyways, I'm getting a little bit sidetracked here. Let's just go back to the technicals real quick. So let's take away the bands for a moment and just focus on the simplest way to identify a trend. Right? Uptrend, higher lows and higher highs. Downtrend, lower lows and lower highs. Simple enough. You know, a 3-year-old could follow that, right? Well, for a while now, it has been a trend of lower highs, lower highs, lower highs, and lower lows. Well, now we finally might have the first higher high. Okay, the first higher high that we have had since March 22, so about a year. That being said, we really want to see a higher low too. Ideally, we could push away from here and retest this old lower high and go from there. That is probably the most ideal. Otherwise, you know, if we get back below here, we start to get back to being range bound. You know, we got to worry about the retest of this and going back here. Like, it gets a little bit more messy than if we just stay above this. We can just keep being trend traders versus range traders. Yeah. What is the blue band on the daily? Sorry, I missed that. Blue band on all time frames. The blue band is an 8-period exponential moving average. Right, so all these bands I use are EMAs. And then the 2 longer period moving averages, the 200 and the 314, these are just regular moving averages. I feel the regular ones work better for a longer period, and EMAs work better for shorter periods. Whoa, writing dildo in the chat? Dude, that's inappropriate. I'm going to have to give you a timeout for that one, Chief. There's kids in here. All right? Sorry, buddy. Yeah, you're welcome. Anyways, we've got a good rising stochastic cycle, and it's only midway, so there's plenty of room to keep running into February. Hold on, I gotta sneeze. Oh. Holy shit, did I mute? I hope I muted the mic. If I didn't, I'm very sorry. So anyways, definitely want to be dip buyers if we get back towards mid 21s. I'm not going to go out on a limb and say, oh, I'm 100% sure this is going to hold, but I'm pretty confident. If we get back to 21, I think there's a good chance we make a higher low and then push up towards this general region. So I'll definitely be looking to get long on some stuff if that happens. And then if we don't get that, ideally we can catch this 8 EMA, right, as it starts to rise up. And right now it's sitting around 19K, but I like to pay attention to how fast it's rising. So we can look at the value right here, right? It's this blue one right here. It's 18, whatever. Whenever we're hovering over, we can see right now it's around 19K. Last week, it was around 18K. So it's going up about $1,000 a week. So when this weekly closes here, I imagine the 8 EMA is going to come up to about 20K. So that kind of starts to line up with this whole general lower high from over here, right? So that would be most ideal. We'll talk about some setups here as we start to zoom in. But for now, in my point of view, things are starting to look a little bit exhausted. So once again, let's go ahead and outline this because this is definitely a key level. I don't know why sometimes TradingView does not let me change the color. Like usually the color pops up right there. Oh, there it is. So this is a key level, right? This is a trend changing level, okay? Because we got above it and we're trying to change it to an uptrend from this painful downtrend. And then let's outline the setup that kind of broke us through there, okay? Which was this BCI setup, you know. Normally I would use the range of this candle, but since all these candles are kind of in that, we're just going to use a slightly wider range, something like this. And we're mainly focused on the body of the candle. Okay, so we're not going to worry about those wicks for now. This is the ideal level to get long. All right, if you go into the 4 hour, you'll see it lines up pretty well with our intermediate term support. It lines up with our BCI. You got a lot of people that are going to cut their shit if we start to break back below 21, right? People are going to puke it because they're going to see, you know, to get down there, what are we going to do? We have to go from the current uptrend to a bit of a downtrend. People are going to flip bearish so hard. Is it reasonable? Partially, because we're still in the southern hemisphere. And I guess this is as good a time as any to talk about this idea. Again, we've been talking about where we want price to be relative to the monthly 8. Okay, we want price to be above it. If it's not, we're still technically in a downtrend. You know, for the most part. It's not always correct, but. And then same on the weekly. We want these bands to be coming up, and we want the 8 to be above the 60, just like it is over here. It's the same way on the daily, right? And I call it the southern hemisphere and the northern hemisphere, and that's based on your location relative to these moving averages. This one being pi, which is a 314 period moving average. There's a lot of math that goes behind this one, so it's honestly one of my favorite moving averages. And then the 200, which, while not really math-based, a ton of people use this, so it kind of ends up becoming a sort of self-fulfilling prophecy. When you're trending below those, that's called the southern hemisphere, which we entered over here. And when you're trending above it, you're in the northern hemisphere, right? Much more confident buying long-term and intermediate-term dips if we're trending above it. And right now, we're still not trending above it. So I think there is a decent reason to be a little bit cautious on this pump, right? I know a lot of people want to hate on bears, talking about liquidating all the bears and all that stuff. Like, I'm all for it. You know, I'm a long-term crypto bull. Screw bears, right? Stop shorting crypto. But at the same time, you know, it's not unreasonable as long as we're trending below like 25, 26K. All right. So, also, this daily cycle, I would really like to see a good reset on that. A good time to point out as well, you're not always going to get that. You know, check this out. Here is our reset after DeFi summer, right around here. And then you would have waited for this like full reset pretty much all the way to here. And this is not even a full reset. This is like a half reset. A full reset did not come on the daily stochastic until the top was in. So just keep that in mind. And only the half half dip on the stochastic was from 10K to 20K. So we are not necessarily waiting for a full daily cycle back down. We really just want to see it cross back up and line up with an uptick in momentum on the daily. And if we can get that, plus, a hold of the daily 8, retest to the BCI, we'll go into BCIs in a minute too. Continuation of the 4-hour trend. If some of these things start to line up and this stochastic comes back up, momentum starts to rise back up again. Things start to look really good. You can come in on the 1 hour and start to hit it. Losing my voice here a little bit. So for now, that's pretty much my game plan. I'm waiting for low 21s to get long. And I'd also be willing to long down in the upper 18s if we get down there. But, I'm not really sure if that happens. Once we do that, if we start to nuke this BCI, then I start to get a little bit cautious, right? I don't really want to see any of these really bullish candle setups getting taken out. Because if that happens, if we take out this BCI, and for those of you that don't know, really quick spiel, a BCI is a bullish candle ignored or a bearish candle ignored, right? You'll see them all the time. It's when you have an existing trend and you have a candle that's trying to reverse or stop that trend, and then you take it out, it becomes in this case, a bearish candle that gets ignored. And more often than not, the candle after goes higher, right? This is the BCI confirmation. The next one went higher. And this tends to hold if it's retested. If it doesn't, then I'll just go ahead and zoom in. It's basically showing that this nice, lovely 4-hour trend, if that doesn't hold, we're going to have lower lows. We have to worry about lower highs and trend continuation on the downside. Versus if we can just retest and hold in front of it, our uptrend is still very much intact, even on the 4-hour. And, it's a lot cleaner for trend continuation. So I would definitely like to retest that region and stay above it, whether it's just, 21.8 or all the way down to 20.5. I'm definitely looking to get long in there a little bit. And then, again, to get down there, we're going to have a lower time frame downtrend. And you can see we're already starting to form this, right? This is our current range low, meaning that from here, our highest point was reached, right? When we talk about a trend, for me, the key low that matters are the ones that lead to new highs, okay? And so this is the last higher low before we pushed to the current highest point in our trend. Thus, if we break that, we now have a lower low. Honestly, guys, this looks like such a clean head and shoulders, dude. I really think we're going to nuke down towards 21K today. Maybe I get BTFO'd and we just rip from the range low here, but this looks terrible. Anyways, so just to be clear, what I'm talking about here is retesting. This is the BCI, okay? This is when our trend paused on the daily and these bearish candles tried to reverse the trend, okay? When we retest there, we're going to be in a downtrend, right? At least short term, we're going to be in this trend, right? So if you think your daily and 4-hour are going to hold, there should be a higher low somewhere in front of here, right? So I'm going to be a buyer. I'm going to be a buyer in this region, right? But you want to do it on small enough size such that, well, one, where are you going to put your stop? Where's your invalidation? Is it this low here, right? The low of the BCI? Do you buy it here just to cut it here? Or do you put it a little bit looser, which means a wider stop, so you got to use less size? How are you going to play that? That's up to you in the end. For me, I'd rather nibble a little bit light, have a wide range for my risk. Oh, thank you. Have a wide range for my risk. And then once this trend that brings us down to the lows reverses, whether we make a higher low or whether we run the lows and reclaim, right? Once that trend is back on, maybe you nibbled a little bit here, a couple $100, couple $100. Okay, now you're being cautious. Maybe you don't even buy the low. Okay, another $100 on the reclaim, boom, new uptrend. All right, this next dip, maybe you want to hit $1,000, right? $2,000, hit some real size. And those are just examples, guys. Size for you, size for me, size for my friends, it's different for everyone. But that's just an example. If you're hitting $10 on the way down in these little dips, and that's a small amount of money for you, then you're hitting 100, 200 bucks on these dips once this trend is confirmed, because once we start nuking, we've still got a 4-hour uptrend with this higher low. We've still got a daily uptrend with this higher low. We've still got the weekly 8, somewhere in here, right? These uptrends are still intact. The only thing not intact, well, the monthly is kind of iffy right now, and so is the weekly, but the only thing not intact price action wise is this little trend here. So if we can hold in front of here and that trend gets back bullish, well then, all right, my daily's still bullish in front of the BCI. My 4-hour is still bullish in front of here. This trend is reversed. We're trending above the weekly 8, all this good stuff. I can get aggressive now. And then at that point, versus on the way down, it's kind of, where do I put my stop? Now you can be a bit more confident throwing your stop below this low here, or if it's near the same region, below that local low back over there. Hopefully that makes sense. Cover the setup for ETH. Yeah, absolutely. That's pretty much all I want to say on BTC. I mean, we definitely want to be cautious. Cautious going into 24, 20.5, 25.5 and stuff like that in this region. Once we get above there and start to form higher lows above like 25, 26K, a little bit less caution, like back here, a little bit less cautious once we got above here. A little less cautious once we got above here. And same the last time, a little less cautious when we got above here. Right, because we could totally do something like we did in 2015, right? Where we get above it, get wrecked, lower high, lower low, lower high, lower low. But anyways, yeah, let's go look at Ethereum, because all this stuff we're talking about, the theory behind it, it all works on Ethereum, and it's pretty much the exact same. So let's go take a peek. Just look at it. It's pretty much the same asset. I would say it's actually performing worse. I don't think the edge is to be long Ethereum over Bitcoin yet. If you look at ETH BTC, at best you're going sideways, right? And I do think this trend will continue for a little bit. This tends to be that like level for ETH, right around in here somewhere for ETH BTC, right around 0.06 ish. I think we're gonna retest below there before the edge is to be super long Ethereum over Bitcoin. Yep. But we will cover Ethereum anyways, because I know a lot of people trade it. It's still, depending on where you're getting in, you can still make more, obviously, than Bitcoin, right? This is up 50% from the lows here, and this is up 40%, from the start of the year, or 50 from here. So you're still about the same as Bitcoin, maybe even making a little bit more. Hold on. Yeah, it's not a bad thing to be long at. It's just not huge momentum on ETH BTC. I'm sorry, my animals are gonna be going crazy in the background, so bear with me. But yeah, same idea here, but it's actually looks a little bit worse for ETH, because at least Bitcoin is trending above this high, right? Trending above this high. ETH is not. ETH is still kind of struggling. Like, do you really want to be getting long right here? That's the question. Do you really want to be getting long, or do you want to be taking profits on your longs from in here, right? I could see, I could see another push up. I could see something like this, followed by a quick spike down, a retest, and then a nuke. I think that is honestly what I'm expecting the most if we don't just start right here and crumble. I think this is coming sooner or later. And the same thing goes for BTC, right? This is coming sooner or later. There's no doubt in my mind about it. Are we still nuking? Sorry, I'm trying to keep up with the PA too, because like I said, I do want to buy the dip if we start to get down here a little bit. But let me just set some alerts. No, I gotta stare at Bitcoin. I've got alerts. Nice. So yeah, do I really want to be getting long right at higher time frame resistance when we're trending, again, still below the bands in the weekly? ETH is doing the same thing. It's trying to get back above the 8 EMA, just like Bitcoin, but it's not quite there. We do have a nice bullish engulfing setup, such that if you're following, I'll just delete this. If you're following the lower highs of every bearish candle, we've been trending below the previous one non-stop until Now, we finally got a real uptrend for the first time since 2021. The cycle's coming up. Momentum is just barely flattening out. If we get a little bit more pump by the end of the month, we should have an uptick in momentum. So that looks good. We're not above the 8 EMA. We're just at it. So that's all right. You know, kind of a little bit of uncertainty. And we're right at the bands on the weekly, which also breeds some uncertainty. That being said, Ethereum on the long term held perfectly at pi and is now bouncing sideways, trying to accumulate, versus Bitcoin that kind of crumbled through it a little bit and has had to reclaim it. So long term, I'd say Ethereum actually looks a little bit stronger. Just in the intermediate term, the ETH BTC pair is not really looking that good. Market falling, yeah. You shouldn't have come to the stream. It's all your fault, brother. Thank God you're here, so we all have someone to blame, though. So, anyways, the same analysis on the higher time frame applies to ETH, right? We really want to see ETH trending while the EMAs are also trending. You know, hard time to trade, uncertainty, difficult to be invested, just like this. You know, to a lesser extent, but like this, versus the, I mean, I'm sure you get the picture, the easier times to trade, right? When all these EMAs are rising and we're trending above it. The easier and just safer to be aggressive on the long side, right? It's a lot more risky now. The risk reward is much lower to be getting aggressive on the long side. But regardless, we're going to look at the setup. Let's go to something liquid like Coinbase. On the daily, we've basically pushed from the lows all the way up to pi. Again, really not a place I'd like to get long. I think there is an extremely high chance, even if we hold right in here, I think there's a very high chance we run these highs, tap pi, and immediately reverse. I'm not saying we're going to go back to the range lows necessarily, but I think this is a very realistic scenario, right? And then once we get down to the bands, again, this downtrend that would take us down there, if that starts to reverse and you get a new uptrend right in front of like the bands, right in front of the weekly 8, something like that, that's a good place to be getting long and shooting your shot. You know, maybe retest this level 2 or something like that, right? Make it a little bit cleaner just so the idea sticks, right? Say we hold the 8, we come up, we hit pi, we nuke below our last higher low. Now we're in an intermediate term downtrend. We retest, we crumble, boom, boom. You know, maybe we're getting towards the lower end of the bands. Maybe we break the bands, but then you reclaim. Higher high, higher low, boom. This is your time to get back super aggressive. Look at that, 1550. You're not buying the bottom. Maybe you're not even selling the top. But that is where the edge to be long is at. And at that point, you know, you can come in, throw your stop below the low. You know, even just to the summer range highs, I mean, that's going to be a pretty good 3 to 4 hour setup. So that would be what I'm looking for. Now, the more optimistic version is, we have a BCI again, right in here. Okay, we had a really strong trend. This candle tried to reverse it, and it basically got BTFO'd. So we'll just outline that just so it's easier to see. I'm mainly focused again on the body of the candle that gets ignored. And right, sometimes there's going to be like 3 or 4, like over here, you know, I would still classify these 3 together as a BCI when you close above them. But, you know, it's up to you which one you really want to be focused on. But let's look at the 4 hour here again. We can throw the bands back on. So we've got our daily BCI support. We've got potential 4 hour EMA support. And we've got 1 hour rising 200 and pi in here. So a lot of good support across different time frames. And another tactic or technique I like to use, let me go to a different exchange so I can keep this drawing, is from each higher low that leads to a higher high, you throw up a Fibonacci retracement. Right? And a good level to be longing the dip is the 50% to 61.8 level, which is right in here. Also lies in the middle of our bands, also lies in the middle of that BCI support that we saw right here. So there is a lot of potential support from 1520 to 1580. So we start to go down towards there, like this. You know, right now we're in a little bit of a downtrend. Okay, a little bit of a downtrend, something like this, right? Maybe you run the stops, maybe you don't. Just an example, and then you reclaim. A couple of retests, boom. That's a breakout. Okay, maybe you nibbled a little on the way down. Now you nibble a little bit harder because you have a little bit of a better invalidation. I don't know, maybe run the lows again, maybe you get stopped or something, and then it reclaims again, okay, and then you're waiting for the new trend. This is basically what happened with Bitcoin this summer. This is your chance to start getting long, boom. Maybe accumulate up here, you can get long again, boom. You know, so those are some ideas I'd be looking at. And then, likewise, you can also play this on the short side, guys. You know, it's not really my style right now, just because of how the daily looks, but, you know, let's just zoom in. You know, let's assume this is our kind of support. Let's zoom in here on this potential little downtrend on, let's go like the 15-minute. Right? So if we don't hold here, right? If we start, right now our current trend is a downtrend inside of a, you know, a bigger uptrend on the 30-minute, 1 hour. Right? This is our trend. Lower high, lower low, lower high. Almost a lower low, not quite there yet, but assume we make a lower low. You can sell this next bounce up, retesting the underside of all these. Also, the same thing we just talked about with fibs, you can throw in the opposite way. You get a 50% to 61.8, that's a sale. If you're looking to play on the short side, you know, something like this, boom, 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 short here, breaks down, cover, 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 and then long the BCI support on the 4 hour on the daily, or you just keep playing the short side until this trend is over. And then once that's over, close the shorts, and you can go back to the long side, which you're looking to nail on the 4 hour. So, yeah, that's one way to do it. If I wanted to spend all day staring at the screen just to maximize the amount of money I can make, that's the move, right? You want to be playing on the short-term day trade side for whatever the day trade trend is. And then you want to be playing on the intermediate term side, the 4 hour, the daily for your swing trades. You know, the last couple of years, I've mainly stuck to the swing trades and long-term investments with the occasional short-term trade, but you know, I just recognize that is not my strong suit, at least at the time. You know, if I spend more time on it, I'm sure I get better and better and all that, but for now it's not my strong suit. So more often than not, I don't go for the scalp setups on the 5-minute, the 15-minute and stuff like that. But every concept and technique we're talking about on the monthly, on the weekly, on the daily, the 4 hour, it all applies on the 1 hour down to the 1 second chart, right? So just keep that in mind. There's tons of ways you can go about playing this. The simplest, I think, is just waiting for a general retest in here. You can nibble on the way down. If you're worried you're just going to get run through, you can just be patient. You know, I like nibbling a little bit on the way down at least. So that way, you know, if you start to nibble here, you're really hoping to nail some size down here. Well, what if you just don't get the opportunity? Well, then at least when you have to get back long in the new uptrend, you have a little bit that's going to bring down your average cost, you know, just a tad, right? And when you're starting to do this, you're not going to be feeling as much FOMO about, oh shit, was that the low? You know, am I really not going to get down here? Damn, like, well, at least I bought a little bit. You know, at least I'm making, you know, $50 today, $100, $1,000, whatever it may be. It's kind of, and it depends on every person individually. For me, it's about keeping the emotions in check, right? It's really important. A lot of people say, you know, trade emotionlessly, and I would agree with that to an extent, but at some point you also want to be emotional. If you're not emotional, you're kind of missing out on some opportunities to check yourself, you know? Like, if I can feel like extreme FOMO on these pumps up, then that says something about how I was trading and investing in here and how I was not getting long at the right spots and all that stuff. I'm feeling the FOMO because I don't have enough size on the table for back here, right? And so I did not really manage as well as I could have if I maybe bought, you know, because everyone wants to look for that big bag, right? They want the big bag of ETH before it lifts off instead of just, you know, maybe just buy some smaller pieces when these uptrends are starting to form, right? Buy some smaller pieces instead of, oh, you know, the first higher high, all right, well, I'm going to wait for this pullback back to the range low, and then I'll get big long. Oh, shoot, all right, well, I'll get back big long here. And then you're not long the whole time, you're freaking out, and then you finally go, all right, screw it. I'll just buy some right now. I'll just go big. Let's go big. Let's go big or go home, baby. Woo! And then you ape the top, right? Whereas instead, if, in here you're recognizing, all right, this next dip towards these lows, I want to buy something so I don't freak out if all this bear talk is just nonsense. So you nibble on the way down a little bit. Maybe you don't buy at the low. Maybe you just buy in here or something. All right, well, you're underwater, but it's just a little piece. So you're waiting. Nice. We got an uptrend back near my cost average. Maybe I'll buy a little bit more. Okay, but I really want a bigger dip to get heavy. Well, at least this whole time you could have rode your little small piece up until you get this big dip into the next month or whatever, right? It's the same idea with this 4-hour setup, okay? You can nibble on the way down, thus that, if you just get run through, you're not destroyed, right? You're just, all right, well, that was a quarter of my position size and I took some slippage when we stopped at below here, whatever, so a small hit versus taking a big risky setup on the way down. It's just, it might work out. And, if it works out, it's almost worse for you because you'll make money, but it'll reinforce bad behaviors and bad habits, speaking again from experience. So, anyways, babbling a little bit here. You need emotions to fall in love and marry a bag. Get dumped on, be sad. That's right, though. Just don't forget, you can count on forgetting all of that once we're in a bull market for a month. You'll never remember any of this stuff. Oh. And one of the worst things, guys, honestly, I'm so split over it because it has helped me so much, but also messed me up so much, is using social media with regards to your trading. Because, there's nothing more crushing than feeling like, quote, everyone is making, quote, easy money while you're sidelined or whatever it may be, right? That shit feels bad, and it can definitely lead you to taking bad trades to try and catch up to the people that have made so much money, Like, at this point in here, I made a little bit of money off Lido and a couple other things, but nothing crazy by any means. But, at this point in here, let's go back to Bitcoin at least. At this point, I got buddies talking about, man, really didn't play this that well, only made about 500K on this move. I'm like, oh my gosh, dude. Woe is me, you only made 500K, and then the other buddy comes in, oh yeah, same, only made like 350, and I'm like, happy to pull in the single digit thousands here. It's kind of like, damn, it can really mess with your emotions. So the flip side of that, of course, is, I found out about Spell before it went 100x, partially thanks to Twitter. I found out about WooTrade early on because I met a guy on Twitter, stuff like that. And that stuff goes on to make you crazy returns. You start to think, damn, Twitter is the move. I got to be on there. But it's really just all about a balance, because if you start getting to the lull of Twitter, even though all this stuff we're talking about on stream, it makes sense. You know it to be true that you buy this one, that, and that, and that, and that, and all that. You almost start to forget it. It almost starts to not matter at all when you're just reading the bullshit of Twitter. So, social media management, guys, that's another one. Not everyone is prone to falling victim to this. I guess I'm just a little bit weaker than some people in that regard, but nah, when I feel like everyone else is winning, it definitely screws with my mental if I'm not. Even though, we got to keep this in mind, guys, in a bear market, and by a bear market, again, I mean, not this, look at the EMAs, guys, not this, but this, the winning is protecting your capital. Winning is ensuring that when this happens again, you've got the money to take the easy, straightforward, high certainty setups. So, if you didn't lose money this pump, you won. If you made money, you really won. And if you made a lot of money, you kicked ass, you're a beast. Huge ups. But if you just didn't lose money, you're coming out on top in the long term because, in my opinion, these setups are not easy. The last week or so, sure, some of the trending setups were straightforward. They follow the textbook setup and all that, but it's not easy because, you're buying after a big increase. If you did that at any point in the last year, you got clapped. So it's understandable that even if the setups, and there were, quote, easy setups back then too, but what would happen? They'd have, all right, here's the money setup, and then it just gets crushed, right? It doesn't mean the setup was bad, just like the setups here are not bad. Just the state of the market really really can mess with how you view that. And keep this in mind, right? Like, it really hurts to miss out on the 50% move off the lows, the quick 2x in a month or whatever. And of course, the rare, you know, there's a few on here that have gone up 2, 3, 4, maybe even 5x from the lows. It sucks to miss those. But you gotta keep in mind, a bull market, that's every day, dude. Every day there's some shit like that happening. You wake up, you missed out on a 10x. You wake up the next day, something you sold last week is up 10x. It's all day, every day. The amount of opportunity is never ending. Every day there's an opportunity. Every day there's dozens of opportunities to make money, and the opportunities make sense, right? They're straightforward. Right now, the opportunities are very risky, and they go on both sides. I could definitely see some good short opportunity. I could definitely see some good long opportunity. What's the good short opportunity here? There's not one. It's just ape long. Just be long on everything because it looks fantastic. Not the case here, right? A lot more uncertainty. I'm watching you, bozo. Whatever cat wants my trash. Absolutely, dude. And like, I don't know. The tough guys are just gonna say, "Hey, man, just don't care. Who cares what other people think and say blah blah." But obviously, like, some people can do that and like take all the good information, make the best use of that possible, and then completely able to ignore everything else they read. In my experience, most people are not like that, and in my personal experience, I'm definitely not like that. But at the same time, you know, I can't just be following 2 or 3 people on Twitter. Like, everyone I'm following has their own little niche and is a little bit more of an expert than someone else in their right. The same way I feel like a little bit more of an expert in some ways than other people too. So it's good to have a nice variety, but at the same time, it can also be information overload. Sometimes a lot of information is not a good thing, right? Like who was it? Who was it in the chat? Was it Misho? Let me double check real quick. Oh no, it was Malkin. I can't remember if that's the same person. I think Malkin's John. I can't remember who that. Anyways, someone in the chat talking about making bank on Solana this week. That guy doesn't care if there's 10 new Arbitrum coins launching. That guy doesn't care if APT is going harder than Solana or if BNB is going harder. This or that. He doesn't care. He is becoming a damn expert at what he does on Solana in that month. That's all he needs to do, right? It doesn't matter about all this information Twitter's giving. It doesn't matter one bit. All that matters is he's nailing his trades on that asset when it counts and when it matters. And he's focused and locked in on that. That is infinitely more powerful than knowing that this Hamachi Finance launches tomorrow on Arbitrum, on Uniswap at 12:05 a.m., right? And maybe you can land a 10x on like $2,000 of liquidity. That's great and all too. And there's definitely times, again, I've made money on shit like that, especially in a bull market. Knowing something is going to happen even a few minutes before it does is infinite edge. So I'm not saying only have one or the other, but sometimes it's just better to be locked in on your own thing, right? And, the homie Malkin is a really good example of that. Kicked absolute ass, just focused on this one coin. I mean, maybe he was trading other stuff too, but as far as I know, this is where he really put his focus and time. Not on Twitter, and he paid for that in the best way. He made good money, I'm sure. So, yeah, it doesn't get talked about as much, but Twitter is extremely valuable for your trading, but it can also be extremely detrimental, and you have to really know yourself. I mean, if you don't think you're getting enough value out of it, and you really feel like you're falling victim to the emotional aspect and comparing yourself to others and all that stuff, just take some time. Take a month off of that. See if it's really affecting your trades. And another good thing is if you're in Blockcircle, I mean, we've got, I'm not going to say there's 1,000 people in there or anything, but we got some guys in there that have been doing this a long time. The eyes are open. If stuff happens, there's a good chance you're going to hear about it in Blockcircle without 95% of the noise that you're going to hear on Twitter. Right? So that's my little value prop for the stream right there. I'm not going to plug it much, but that's the little value prop. It's a good place to be, right? All right, what time is it? 4:15. I think that's about all I have to say about BTC and Ethereum. I mean, you get the idea, right, guys? Either we're going to get a good little higher low here to bid, or we're just going to get crushed back to the lows. Like, it feels almost 50-50 at this point. We're kind of just praying that the dollar is going to keep getting crushed that stocks are at least gonna not get crushed. You know, if they stay sideways right now, it's been fine. Stocks have been going sideways and crypto's ripping. I think we just want them to not go down. We want the dollar to not come back up. And on top of that too, we really want gold. I mean, look at gold. It looks absolutely amazing. Like, this is just beautiful. We want that to continue too, because gold up, great for crypto. Dollar down, great for crypto. Stocks up, great for crypto. All these things continue. I'm going to keep buying the dip. All right, simple as that. Nice ad. Thanks, dude. All right, now on top of that, let's talk some shit coins. So there's been a lot of hype around Shibarium, the L layer 1 or whatever it is for Shib, or I don't know. I mean, there's a lot of speculation going into it on what actually it is, and I just, to be fair, I don't keep it up enough. Like, I don't know what the hell it's gonna be, but there's a lot of hype around it. BOEM went from 60 cents to $1.40. Fund went from about 10 cents to about 40 cents. Like, there's some good hype here. So I'm keeping my Unification bag open. I took off about half in the mid 30s just in case. It would suck to see this nice little breakdown and be like, I missed my chance to sell. Then it pumps right back up. I'm like, oh shit. And then again, not take it. So I took some off for that. I didn't make a ton of money on it or anything, but I will definitely keep some in case we keep ripping. I think there's still a good 2x out of this one. I don't know if it'll be from here, if it'll be after some consolidation or whatever, but I think there's a good 2x on this one. So I'm holding on to that one because I think there's Shibarium hype, blah, blah, blah. And then the other big hype wave, I think, is on Arbitrum. And obviously there's more than just 2 hype waves. Like, there's stuff going on with Kanto and other ecosystems and shit that I'm not aware of. But my favorite focus and my favorite ecosystem to trade on has been Arbitrum for a long time. So here's some coins I'm looking at there. Let's put them in the most important order. In my opinion, the most important is GMX. For me, GMX gives absolutely massive Chainlink 2018 vibes. You guys are forgetting something, right? This sideways price action, this is a bear market. This is a bear market where most things look like this, right? Most things are toast, right? Oh, Matic BTC actually looks good. Most things are absolutely crapped on. Like 9 out of 10 charts. The entire year, GMX went sideways. Sure, it went from upper 50s to like $10. Still a big decrease. But then it pushed all the way back to all-time highs, back to the mid-range, higher low, back to the highs, another higher low. Tell me how this is not the same as Link. Again, it was the same thing in 2018. A bear market, absolutely horrendous. Most coins don't look like this. Most coins look like this. Chainlink said, nah, I have the power. Chainlink ripped the moment we were out of the bear market. This is basically the time period we're in now. Okay, or at least this is what people are comparing us to. This is when we broke out of the higher time frame downtrend in 2019, just like we're attempting to do here in 2023. And Chainlink went on. I wish I could copy and paste a bar pattern from here into here. Wait, we have GMX on exchanges, don't we? Oh, heck yeah. All right, well, let's go ahead and let's do a little theory craft for the Hopium boys. Let's do a little bit of this here. Theory crafting. Let's go to GMX. Who's going to have the most history? Anyone? Time to get married. Who's going to have the best history? Oh, can we do... I don't really want to go versus ETH. Let's just do this. It's been on... Oh, gosh. It's been on Binance since October. It's been around since October the last year. Damn. Well, can we get any better price history? Was it on any exchange first before Binance? Probably not. Maybe Poloniex? Look at the GMX ETH pair, dude. Looks really solid. Up from 0.005 to 0.05. 10x. 10x during a bear market against ETH. That's how good this coin is. Okay. Well, let's go ahead and we'll just throw it on this chart. Whatever, it's fine. Let's see if this will work. Nice. Sort of. I mean, it's going to be a little bit skewed because of the different valuations, but you know, we can shrink down a little bit. Give it something a little bit more reasonable. So here's Bitcoin having. Let's assume market top about what? A year after having or something? Let's assume something like that. Okay. This could be exactly what we're seeing for GMX right now. And keep in mind, we can't see it right here, but this is October 2022. For the entire year before this, right, this entire year we went sideways. Push up, couple $100 makes sense to me. A nice quick 4x, 5x. This is kind of what we're seeing right now on stuff like APT, that first big push. Now it's probably gonna, whether it stops here or stops up here, it's probably gonna do some sideways shit for a while. Another great example of this is like, oh, that's not what I meant to click on. Let's look at Matic. Matic's a pretty good example of this. You almost can't even tell nowadays, it's come up so far, but huge big push up, right, into new highs, and then zzz for a while, and then another big push. That's what I'm thinking for. That's what I'm thinking for GMX. I'm thinking, you know, whether not necessarily right now, but you know, in the coming months, I'm thinking push up to a couple $100, sideways in the $100 to $200 range, before a push to 1,000 plus, before the bull market is over, right? And that which would be about a 20x from here. In my opinion, that is the safest, biggest bet you can make on Arbitrum out there. Let's go check out the valuations too. So that would be about $8 billion for GMX, which puts it at right around the top 20 somewhere. That puts it at the same range as Polkadot. Garbage. Trash. Tron. Garbage. Trash. Litecoin, in my opinion, garbage. Trash. No use cases. This shit is weak. So being up there, in my opinion, is not overvalued for GMX. And that's basically my plan. A big push up this year. Am I going to catch this move up? I don't know. I'm going to try to. I'm going to try and get some exposure. I already have some permanent exposure in this. If you guys aren't aware, they have what's the way to put this? A volatility muted coin, GLP, which is like a basket of coins. It's like 50% stable coins, 20% Bitcoin, 10% ETH, 5% Chainlink, some shit like that. And when you hold that, you gain APR, and one of those portions of APR is in an asset called ES GMX, which is escrowed GMX. And as far as I know, this is permanently locked, or you might get it after a year or something, but I think if you want to get it after a year, you can't be earning rewards. I don't remember exactly how it goes. In my opinion, I've just assumed it's permanently locked. This is earning me money every month based off trading volume and shit like that. So I have some exposure through that just from staking GLP back in the day. But other than that, I don't really have any exposure to this. So I would really like to get some in here. I'm hoping for a bit more of something from Bitcoin back again towards 21K. Maybe even 20K if we can get lucky. I would love a dip back towards low 40s on GMX, right? And then at that point, you know, I feel pretty confident in a setup like this, targeting up towards, you know, like I said, a couple $100. You know, we can even try a little Fibonacci action if you want to do that, right? You know, $90 first target. All right, that makes sense. And then, you know, 140 next stop, in front of 200 next stop. But big picture for me would be $200 for the first move. So you're looking at anywhere from 3 to 10 times your risk on a setup like this. And if you really want to go for it, especially if you're on Binance or something, you know, you could do a really tight risk reward setup back towards 40. Right? Something like this, okay? You know, if you get a setup, let's say we do a lower low here, lower high, lower low, lower high, lower low. Boom, you run the stops, reclaim. Previously, I'm talking about a setup like this, a bit of a lower risk setup. Wait, no, that's not at all what I'm talking about. Sorry, I'm misreading my own damn chart. This is the setup I'm talking about on that DeFi chart. Stop below this big FTX nuke, targeting, like I said, about a couple $100. But you could also work in a tighter setup with risk down to like 40. So again, let's say you get a little bit of a pullback here. Okay, I'm gonna assume we don't run the stops. Obviously, you can run the stops. I feel like I assume that a bit too much. It doesn't always happen. Let's say you do something like this. Okay. Well, now you could do a split. It's what I call a split position, where you do half of your position as a little bit lower risk but also lower reward with a wide stop. So let's say you're risking $1,000. You could risk $500 on that setup, and then $500 on a tighter risk reward, where there's a higher risk of you getting stopped out while the trend still remains intact. Because you could also do this, right, and still be solid. You could run your stop on this tight setup and still be in an uptrend. But if that doesn't happen and you keep your tight stop and you reach your target, look at that, 25 times your risk. Let's say you risk 2%. That's a 50% account increase versus an 18% account increase. Now, obviously, because it's half size on each, you're actually making, half of that. But regardless, I like the split stop version because you get a little bit higher size on from using a tight stop. But if your stop gets run, you're not going to be as FOMO-y because all right, well, that sucks, but I still got this other big piece on, or this other little piece on with my wider stop. And, you can probably run the stops here without running the stop all the way back here. I don't think this gets run unless we do like some COVID swan dive or something like that. Okay, so that is honestly what I'm most, not nervous, what am I looking for? Most excited to hit is a nice big GMX long. Ooh, I don't even know. Is GMX on Woo Trade? I'm going to check that real quick. Bear with me, laddies. I just want to see if Woo has, I don't think they have GMX perps, do they? They have GMT. I don't care about GMT. I just want to trade GMX on leverage, man. Oh, well. That's okay. Is this the right? Yeah, okay. So, that's my, number one goal right now. Outside of just landing a nice little BTC long, I want to get a good bag of GMX. Am I going to get my perfect pullback to here? I don't know. I really hope so, but, we'll see. Maybe I'll end up missing out. Maybe I'll end up having to FOMO at $60 or something. I don't know. But for now, that's the game plan. For most of my size that I want in DeFi, I really am just focused on GMX. I'm trying not to spread myself too thin. I've got a lot of long-term bags locked up, so I'm not too worried about missing out. As far as variety goes, I've got a lot of different kinds of investments. But I really want something I'm extremely confident in, like in Arbitrum season. I really want exposure to that. And right now, I don't have very good exposure to that. My only exposure was Excalibur, which in my opinion, it'll probably still pump. I just don't think it's as high quality as of a project as some of these other ones I'm looking at. And for me, the liquidity is just not there. I want something like GMX. I can ape in 50 Gs, ape out 50 Gs with very little slippage. And for me, that's nice. It's nice to know if I wake up tomorrow and I'm not feeling the setup anymore, or it's not validated the same way it was before. I want to know I can ape out easily without crushing the market 10 or 20%, because then the other people I know that are in it, which I shouldn't have to care about that, because you guys shouldn't have to care if you're dumping on me the same way I shouldn't care if I'm dumping on you. But I don't want to. I don't want to nuke Excalibur 10% if I know the homies are holding it. But if I'm not interested in being in it anymore, I'm gonna do it the same way. If anyone else is, they should do it too, because it's it's their own money. It's nice to know that I can buy a bunch of GMX today and just sell it at market value. And Excalibur, that's not the case. And even some of these other low caps like Plutus and Jones, I can do the same with those. The liquidity is not nearly as bad as something like Xcal. Wow, Dopex actually has the best liquidity of everything here, which is why Dopex ecosystem is my next big thing after GMX. GMX is like my safest, lowest risk, lowest reward play. And then Dopex will be right underneath that, where I think it's also not extremely risky, but I don't think the rewards are going to be as high as something like Jones or Plutus that are extremely low cap. $3 million market cap. Jones is 12. Damn, $12 million market cap. Like that shit is easier to go from 12 million to 100 million than it is to go from 70 million to 700 million. So typically, if GMX is a 10x, Dopex might do a 15, maybe Jones will do a 20, and then like the micro caps are going to do like 50x, but the liquidity is going to be a lot less on those. So anyways, I am once again babbling a little bit. You have the WETH to, oh, thank God, dude. I've always tried to type in like the WF to USD, and I can never get it right, dude. It just makes a really wonky chart. So please, yeah, please post that, dude. Thoughts on GNS? I haven't used it, to be honest. I'd like to have an opinion, but I haven't used it. I don't actually know anything about it. Is it supposed to be is it a GMX clone? Is that what it is? It's on Arbitrum. Oh, dude, what the heck? Is this accurate? There's no way, right? Is there another exchange? Oh, I guess their exchange is... Wait. Is this the exchange where you buy it? Because right now I'm seeing the best liquidity is on not only QuickSwap. I don't want to go to QuickSwap. What is that, Phantom? And then the next best is like $7,000 depth. I mean, you can't ape that. I can't ape that. Or is this just not showing? Like, I know sometimes, like, it's not shown properly if there's an exchange that doesn't pop up on here. Like, I don't know if Gains pops up as an exchange. I guess not. It looks like this is the most liquid. Oh, is this Polygon? Is that what QuickSwap is on? Dude, the moment those words came out of my mouth, I felt like such a twat. I really did not mean it to be like that. But realistically, like, again, like I said, I want something I can put some, decent size in. But if I put 20K in this and then I want to take it out next week, it's gonna rip the chart apart, and I don't like that feeling. But this is fine. This is fine. Like my size is not too big for shitcoin. I'm talking even just like 10K, even 10K. This is gonna be like 4% slippage. Like, but this is fine. Okay, let's check it out. I feel like just a prick. I really did not mean it that way. I'm sorry if it came off that way. This is the one, right? 2 million liquidity. Yeah, thanks, nerd. Hey, I felt bad before you called me out on it anyways. I was like, I just knew this guy's gonna call me out. Oh, wow. Holy shit, dude. This is one of the best charts in crypto. What the hell? This is really, really nice. $130 million market cap. Okay. All right, yeah. It's pretty good. I mean, yeah, I'm about to say, I don't see any way that this does not just run to the highs. I mean, if you're already in from these dips, right? Congrats. It looks a bit iffy for me here, just because I don't know, dude. I'm so bad at aping at highs. Like, if you had a coin that was like this, and it bounces up here, I'm going to be like, yeah, well, I don't really want to ape in at the highs. This is literally what happened to me at 18K BTC, and it just rips. But I don't know. There's not really an entry for me, but I do think it just goes to the highs. Honestly. If the liquidity was a little bit better, it might be something I'd be willing to ape. Honestly, though, it's not even that much better than GMX. GMX is only like at 70 for a 2% depth. Assuming that this Polygon depth is right, I mean, maybe there's some edge here. This is 400 million versus 130 million. Liquidity is not that much different. What is this? Probably like 2 million. 2 million liquidity, 2.2 versus 3.9. Might be onto something there, but I don't know. I don't know. The chart of this one is really nice though. 60 cents up to like $4.50. I mean, that's pretty damn good. Yeah, if I buy in, if I don't buy in, it's gonna rip. So maybe I won't buy in. Then I'll buy the new high for you, right as you sell, and you can get your rebuy at like $1. Oh, shameful. Honestly, though, I do really like this, right? If this gives me a pullback, I would totally be willing to ape some. You know, back near 350-ish. Is this something I can put alerts on? Ooh. Damn, Matic has the USD pair. I mean, liquidity is terrible for it, but... Ooh. Damn, actually, I don't know if I can use that. Maybe this one. That should be liquid enough. I don't know what site this is, but maybe it doesn't matter. Oh, DAI. That's the one with the DAI stablecoin. Yeah, heck yeah. All right, so we'll throw some alerts here. Yeah, I think it's a pretty nice setup. If you can get long, I mean, I assume if you're asking about it, that you're probably already long. But you know, if you can get long in here with a stop here, targeting price discovery, I mean, what's the first fib extension of all this? Like $7.50. I mean, that's a pretty nice trade. And then if you can catch some tighter swings in the middle of that, you know, maybe like a breakout, all-time high breakout trade. I don't know. My big problem is that I don't want to spread myself too thin. Like I do think this is really nice. Probably like top 10 chart in crypto right now, up there with like APT, OP, and GMX. So if you're in this, you're chilling, right? As long as, you know, wherever you're in from, you know, you've reduced some risk, take some profits, because what we've seen in crypto has been crazy. Even if the echo bubble is going to continue, there could be like some really harsh pullbacks. Definitely want to have taken some profits, but the rest, I mean, you're pretty much just free riding. Take some on the new high at 5, whatever. Take a little bit just because you always take on new highs, and then, you know, you're kind of just riding the free bag, right? Just raise your long-term stop, right? Every time you make a new high or low, big picture, and then just trail out with that. I mean, it looks really good. I would definitely be interested in getting a piece. I'm gonna set some alerts. Maybe cop a moon bag. Thanks, dude. I really appreciate that. That's something I've always wanted because there's so many. I don't know when they added them, maybe like middle of last year or something. But all the Uniswap pairs are on here now. But who the hell wants to chart against ETH? Like that doesn't show me really anything. Okay, so can we not ape GMX, right? Can we just chill? Relax. So yeah, hopefully I spoke on this enough. Again, if you're in, congrats. This is huge. If you're not in, I would definitely be eyeing that like 350 zone. Right? And you know, you could pick up some longs, loose stop back down here in like the 250s or something. And then once the little downtrend is over, you know, you could pick up some more aggressive stops. More aggressive positioning or something like this. Targeting new highs, targeting fib extensions, whatever you like. Just you know, it might not matter, but just keep in mind, right? You know, it's up 600% during a bear market. That can either be an extremely good thing, showing that even in the worst of times, this coin is outperforming every other coin for the most part. But it could also mean the moment we turn to shit, this is the only place people have profits from. So if they're losing money on Bitcoin, on all their other shit coins, they're saying, damn, but I'm still up on gains. I better take some profits while I still got them. You know, that can really turn into a fast shit show. One that I feel like, didn't Metis have something like that happen? Ooh, Metis is wrecked, dude. What the fuck was that? Where was the original Metis chart? Oh, I want to type it over here. That's where I get the good info. 10 months, 1 year, 8 months. Oh, it was definitely on ETH. Was it this one? I don't know. Now at this point, I've honestly forgotten what point I was even trying to make. Nice job, Alex. But anyways, yeah, gains looks really good, dude. I think you're in for new highs on that one. Dopex, is this really the best liquidity or history? I swear it's been around longer than that. 5 months, 1 year, 6 months. This has got to be it, right? Yeah. Where'd all the liquidity go, though? Oh, I guess it was out. Dopex was out on ETH first. All right, let's check that out so we can get some real price history. Oh. Bruh. Bruh. This chart did not do it. The other chart, whatever, did not do it justice. Look at this shit. This is beautiful. I'm not saying we don't run the lows again. That's my disclaimer. But isn't that sexy? Damn. Let's do the same for... Oh, we already got it for our DPX. Damn. Is that the most history we can get, though? Here we go. Oh my gosh, was this really... Oh, I forgot it was $2. My buddy showed the shit out of this to me back then, and I... These two look stellar, dude. Jones also looks really good. It's got some catching up to do. Magic looks really good. I am leading myself to believe that there's going to be a pretty sizable pullback on that one. Plutus looks good. Not quite as good. It kind of just looks like a downtrend. But Metis and Dopex looking identical, dude. Is there any hype around Metis anymore? I feel like I heard about that for like 5 months and then I never heard about it again. Damn, we're not even going to get a good 4-hour dip, are we? What a joke. The move in the last month really has been anytime you get like a 3 to 5% dip, you just ape long. All right, All right, we've been going about an hour and a half. I might just call it there. Pretty much discussed everything I really wanted to discuss. You guys have any questions? We can address something if anyone's curious, but if not, I'll probably just head out here. I'm getting kind of hungry. Pretty good stream, though. Thank God. I mean, it sucks to have missed out on this, like the majority of this move, but God, I would rather miss out on this move and have something fun to talk about than just sit through the more of this crap, dude. I don't know how much longer I could take this, dude. This was getting mind-numbing. Same with FTX. That shit sucked. Everyone lost a ton of money, but golly, dude. Obviously, the favorite bag is that Wu trade. I mean, come on. Wu trade is the GOAT. We didn't even talk about Wu trade on the stream, actually. But Wu trade's the GOAT. It looks really good, dude. If you guys get a bid at 15 cents on Wu trade, just take it and walk away for a year or two. Yeah, I mean, I feel like I was prepared for like another year of boredom, but at the same time, it felt like every day we wanted to bang my head against the wall. Like, yeah, Wu trade though, favorite bag for life. I mean, these guys are so undervalued, dude. I mean, I don't even know if they're top. They're still not top 100, dude. This is crazy to me. What did FTX blow up at? Was it 20 billion? Or something like that? What's Binance at? Like 40? Golly, dude. What a shit show. Yeah, obviously, favorite bag is Wu trade. Come on. We got some Wu gang in the chat. Alright. I appreciate you guys tuning in. I think I'm going to call it for here, though. But I hope you guys enjoy the rest of your Sunday or Monday or wherever it is where you live. And have a safe trading week. I will see you guys in the chat. Peace out.